Let's figure out what the prices of crude are going to really entail. For now, it's looking a little bit stable, but we're still seeing escalated levels, that touching $80 per barrel. So let me welcome on board then Peter McGuire and ask him about what he's making of the move in the commodity markets. Peter, hi, morning. Great to have you on ET Now as always. Peter, already knocking on 89 or rather 80 right now for the Brent. What levels you foresee in the near term? Should the situation of Hormuz remain where it is currently?
Well, good morning, Aisha. I tell you what, it's been a very dynamic Monday morning in Asia. We're up 4.4% as far as Brent and WTI. It's really rattled the markets. As you mentioned, you're knocking on the door of 80, maybe 82, 83 has got the potential over the next day or two. And it seems to be very protracted. Also, the other side, is Iran going to step up as far as a retaliatory? How's this all going to read and flow? It's alive, it's dynamic, and at the moment, everyone's long crude, and it'll be interesting to see how that washes across naturally Asia, the Middle East, and then when we run into Europe and then US tonight. So, yeah, I'm expecting higher prices in the next couple of days, and it's very difficult to say what the handle's going to be, but it seems to be heading north.
Peter, hi, morning. Do you think the Asian markets are much more, prepared this time as compared to what they saw in March? They have alternate sources and supply chains ready in case of further disruption that comes in from the Strait of Hormuz?
Yeah, I do think so, and I feel as though that you're learning the second and the third time round, but it just demonstrates to the marketplace as far as the fragility and as far as tanker crossings or vessels being allowed to sail through the strait. The impact naturally is going to be one felt with higher prices across commodities. Next, of course, inflation. The third part is as far as any supply disruptions and whether this is going to start to be the new normal going into August. One would have thought that it was well and truly behind us, but it seems to be in such a way, gaining momentum. So I feel as though that there's a lot of uncertainty looking forward, and that's what markets don't want to hear.
Hi, Peter. Morning. What's the sense like with regard to the top, therefore, on crude, if at all things were to go south? The last time you suggested 85 on the barrel. Does that still stand, or does that at all change?
Well, good morning, Hirsch. I mean, you're up 4% this morning. I'm interested to see how UK and naturally in Asia equities, how they travel today. But the overall, I think 85, possibly, 82, 83. But look, it could ratchet up there very quickly. When you're seeing moves like this in intraday, it takes us back to the old times where we saw 7 and 8 and 9% moves over a trading session. So that could well be the condition that comes into the market because this happened over the weekend. Markets were shut, now you're open, and now it's game on. So, yeah, possibly it's going to be an 85. I mean, it's really very, very strong at the moment, and there doesn't seem to be anything to pull it back.
Last off, there's this 10% crack on the SK Hynix. What do you make of that? The NASDAQ listing was strong. What's the sense there?
Well, it is strong, and I mean, today's the first day of real trade, so it's going to be, again, fascinating how it washes through as far as retail and where the absolute, appetite is going to be. I'm very bullish on that whole sector, and I'm expecting, quite good performance over the second half of the year. So that's where we're trending. NASDAQ's nearly at all-time highs. S&P, running close to 7,600. And the Dow's really strong. So I think that momentum leading forward, I'm interested to see what happens tomorrow as far as Fed Chair Warsh and the CPI number dropping 90 minutes beforehand when he testifies in front of Congress. So that's a real issue, Hirsch. As far as guidance and what we're expecting from bond rates, you've got a 10-year at 456, 2-year running 421s. It's hot.
Right. Peter, while we do talk about crude and the impact all the ongoings right now in Hormuz once again may have on that, how do you propose silver and gold are going to pan out? And do you sense that there could be a move in those prices or rather those commodities upwards, while up until now that's not the case?
Well, yeah, very interesting issue because we've really had very minimal volatility across both of those in the last, month or so. It's been very, very flat. I'm saying they've been range bound. Silver's off the best part of 53, 52%, and gold's well down from that high of 54 odd hundred. So I think that when you see these markets start to, sit in that really tight volatility band, there will be a blowout. I'm expecting those to really perform quite nicely in Q4, but we've got to get through the rest of this situation in the Middle East because that's drawing all the horsepower. But I'm expecting both of those metals to perform well, certainly in Q4 and Q1 27.
How do you look at, you gave an outlook for gold. Do you think the gold will slip below the 4,000 mark given the fact there are inflation fears and rate hike fears that comes in?
Yeah, look, it could go back under 39, 39.50, but I think there's going to be a floor there, maybe a fraction, 38.75, but it's very choppy. They're big swings intraday, 2 and 3% moves. So there's opportunity to trade. But if you're looking at as far as buying opportunity, I think it's really well priced at the moment, considering the discount from where it was in January. So, we had an enormous run up last year. That September to really January period was on fire and just extraordinary moves to the upside. So, yeah, I'm expecting gold and silver to perform well in the foreseeable future.
Peter, always good chatting with you and getting your insights in. Thank you for your time.
Thank you, Aisha.